On Wednesday, the US stock market made some efforts to regain its footing. However, a fall on Tuesday was so sharp that all efforts were in vain. Moreover, investors grasped this opportunity to take profit. As a result, the key stock indexes closed mixed with the minor changes yesterday. The preconditions for the market slump were discussed yesterday. Experts share the viewpoint that steadily rising yields of US Treasuries are to blame for sell-offs on Wall Street. Bond yields have surged to 1.5%. Nevertheless, despite a slump, US stocks are still holding at elevated levels, just 5% lower than all-time highs. Perhaps one of the reasons why the market is unable to recover is the fact that US unemployment claims grow week after week. Investors are worried that in every weekly update, the actual number of first-time jobless claims is higher than expected. Let's try to figure out how this situation impacts on market sentiment. The S&P 500 edged up 0.16% on Wednesday. However, futures contracts rose to 4,360 in the New York trade. This dynamic indicates the likelihood of a robust recovery in the near future. Later today, the S&P is capable of moving to the upper border of the corridor between 4,320 to 4,400 points. Experts say that it has not declined enough yet to open long positions amid the ongoing downward correction. Probably some high-impact reports, such as the ISM manufacturing PMI for September and a weekly update on US unemployment claims, could bring some changes to the market. The PMI report is due tomorrow. The jobless claims have been already released, and we have highlighted the worrisome trend. Meanwhile, the US dollar asserted strength on Wednesday. Its index has surged from 93.40 to 93.40 in 2 days. In other words, the index has appreciated over 1% against major currencies. The bullish run of the US currency knocked down its strong European counterpart. The euro-dollar pair tumbled to 1.1600. Today, the euro carried on falling, having slumped to 1.15. Amid the advance of the dollar, the index stands at 94.25. It's expected to trade in the corridor of 94.00 to 94.40. Despite the vigorous rally of the US dollar across the board, the Canadian dollar is showing resilience. As the commodity currency, it finds solid support from the oil market. Following a recent fall, oil prices have been able to regain losses. As the energy crisis is brewing up in Europe, oil prices are set to grow further. It means that inflated oil prices are going to put pressure on the USD CAD pair, limiting its growth. Currently, the pair is trading at near 1.2730. It's likely to hold in the corridor between 1.2680 and 1.2800. And no crucial changes have happened in the crypto market overnight, including Bitcoin. Traders are in the wait-and-see mood. The CISO of the most popular cryptocurrency depends on the news environment. Bloomberg revived risk-on mood, saying that the US dollar is going down. It means that futures on the S&P 500 and gold have reversed upwards. In turn, Bitcoin and Ethereum also perked up, thus reviving the whole crypto market. In the Asian session today, Bitcoin again climbed above $43,000. Importantly, the outlook for the crypto market is obscure, hence please trade with the utmost caution. Your risk management should be in the first place. The trading range between 41,000 and 43,000 is still valid for Bitcoin. However, be ready for a sharp move in light of significant news. All in all, while the Eurozone is facing a challenge of extremely high gas prices and prospects of rampant inflation, the downward correction is still going on in the US stock market. Analysts do not rule out that we will see a sharp spike anytime soon, perhaps tonight. The question of funding the US government is still open on Thursday morning. As we said yesterday, the Senate did not approve another increase of the federal debt ceiling. Without passing the appropriate bill, the US government is running the risk of a shutdown on Friday. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.